Hello everyone, welcome back to another video. In today's video we're going to discuss something known as delta profile. So this is nothing fancy, but what we're going to do is, along with what we generally use in our previous videos, that is imbalance and the volumes, we're also going to use the delta profile alongside the bid ask that we generally see, or the volume what we see. So this is something that has been recently added on Go Charting. So we'll just see how we can use it and how we can add some valuable information into each candle that we look at, and how we can use it to take better trades or scalps. So what I have right now is a 1 minute chart. It is the basic chart that I generally use. So what you see over here is a 1 minute chart. Now if I expand this, you will see I have been we've published a lot of videos on this. This is the volume, I call it the volume bar, wherein in each bar I can see the places exactly where the largest chunk of volume transacted, and the POC is marked in blue if you see, and the POC is extended only if it crosses a certain number of volume, which I have set it to 1,50,000 if I'm not wrong. You can do it whatever you want, and I keep it, it varies depending on the day and the volume that is being transacted on the day. For example, if you take this is a 21,800 C for the present weekly contract. So if you look at it on a Thursday, the coming Thursday, the volumes will be extremely high. So you will see a lot of these POCs popping out, even with a threshold of 1 lakh or maybe 80,000. So that is what you need to be wary of, and you can keep changing, or you can have it set to whatever you like, and relativity is what matters. So having said that, let's move on to what we are here to discuss today. So the first thing, this, as you see, is a volume bar. Now what we have here is we just have the volume. Now what if we wanted to add something else to it, as in the delta profile? So a lot of you guys keep asking about the settings. So it's you can go here. I'll just scroll it down so that you can pause and see. So as of now I've kept it to single, and the text format is volume, and this is the color combination I've kept. So wherever it is a dark orange sort of a thing, I see these volumes highlighted, and I can straight away see within a bar, within a 1 minute bar, or whatever you like, I see the volumes that are transacted. And you can have a look at the max delta, min delta, COT, high and low, to form your opinion. Or the other way is to have a delta profile. So what we're going to do is we're going to look at clusters of delta profiles. So first we'll see how to set it up so that you don't find it difficult. So the first thing that we do is we make it double. Okay, now on the left side you can have bid and ask like this. So this is the standard template that is there. So you can, if you just select bid and ask over here, have background, delta, and background, if all are ticked, if you like, you can have a profile also. So I'll just show you how the each differ. So I just expand it so that you can see. Okay, so if you have the bid and ask like this, so you can see we have to extend a little bit to see all the numbers inside. Now it is not essential and actually practical to look at every number in there. What you need to do is, like I keep saying, it is very difficult in real markets, and with the volatility that is going on, to track each and every number. You should be your eye should straight away go to the place where you see a lot of volume that has been transacted. So in this candle, for example, there is a lot of information in the sense, if I look at this place, okay, I see there is a lot of delta that is transacted here, and these guys have failed. So there is a sort of absorption here. We just dwell into what we're going to discuss, but I'm discussing the bar and how you can set it up to see everything clearly. It does not make sense to have everything in the bar, but at the end not be able to make sense of it. So if I look at this bar, I'll find it, even after so many years, I'll find it difficult to make sense of it. The only thing that I'm coming to know is something like this place, where I can see a lot of delta that has been transacted. All the other places I can see something over here, and then something over here. Okay, these are the important zones that I can see makes sense to me. Okay, now I just make it a little better so that you will see how even small details help. Now if I switch on the profile, okay, so I have switched on the left profile, and I can straight away see the volumes that were transacted the places where the volumes were transacted the highest. So when we just marked a little time back, of course they're the same, but I took it of delta, and it is not necessary that high delta volume values will correspond to high volume values as well. But in this case it is similar. This is something that we missed. So if you see over here, we have a lot of volume transacted, and the delta is a little negative, not that much. And you can see these bid and ask, or the volume profile is covered, I mean is colored on the basis of delta. The next step that you can do is, I mean, if you want, you can switch off the background as well, and you can see something like this. So this looks a clean chart, there is no doubt in it, but do you actually are you actually able to make sense of something that is happening? It is very difficult, trust me, to make out these two places where there's high volume transacted, of course, because the delta is there. But in real time, this will be really fast, and to make sense of it is a little bit difficult. What you can actually do when you have something like this is have the imbalance switched on. Okay, when you do that, what you do is you have these we will color this blue for a start. Okay, so what this will do is, and we will switch off the background on the left side. Where are we? This is the cluster, and the background is switched, so we'll switch off the profile. Okay, so this immediately points me to places where I see imbalance taking place, and the color is of course blue. It is signifying that there was an imbalance of sorts in these places, and the imbalance that was there is highlighted by these if you see the magenta lines, that is, there was a sell imbalance here, sell imbalance here, there's a sell imbalance and a zone that is formed. So immediately the same bar has started giving us some more information. Okay, and you can see it accordingly. I'll just mark it. So it is the same bar, but now I have really good information. I can see there is some sort of I mean, these were the buyers. If you see these levels, this is buy imbalance. As you can see, there's zeros over here. These buyers tried to take it out, or whatever they got. I mean, they were not successful. In the second bar, the sellers have stepped in, and again there are some sellers stepping in here as well. So this is a zone now suddenly makes a lot of sense, and I can carry this zone forward for a pullback and see if this works or not. So the same bar has started making a little more sense now. Now let's move ahead and see what else can we do. Now this is one way to get your charts plotted. What I generally like is, again, there is imbalance here, but I mean, I would like it to be a little more simple but detailed. So what I do is I go on and switch on volume. Okay, and what I will do is I will switch on background as well, and I will make this imbalance color something neutral, something like this. Okay, now suddenly in the same chart I can straight away see the volumes that were the places where there was high volume transacted and the imbalance levels, and on the side of it I can see which type of imbalance was actually taking place. So for example, in this place where there's the highest volume transacted, I can see, I just close that thing for a moment, and straight away what I can see is that this is the place where the highest volume was transacted, and there were a lot of sellers that came in and they are trapped of sorts. Now this zone becomes of good significance to me. I will just discuss this delta profile also in a minute after we finish with setting our charts. Now this is what I like. You can switch over to bid ask and the imbalance zones. This is what I generally like. I have the areas with the large, I mean, imbalances also showing, and as well as the large volume clusters at once, I mean in one glance. If you find that these high volume areas are still not being plotted properly because of the imbalance zones that are coming, the other thing you can do is go over here, and the imbalance zones will be plotted like this, support and resistance color. So the blues and the reds will keep on plotting like you see over here. Okay, but if you don't want this color, you can just go ahead and reduce the opacity over here to 0 almost. Now you can see even the volume part that you thought you were missing, you can see it over here with this the imbalance zones, or I mean on the cluster chart, absolutely vanishing. And if there is any three for example zones like this where there are 3 in a row which we have set over here, this is the ratio, and this is the number of consecutive imbalances which plot the support and resistance zones. This is the way we do it. So now after this, now let us move into what we are going to discuss and how we can use this strategy. So this is the chart I'm going to use. You can change and you can derive your own way of plotting a chart depending on how you like. We'll just go ahead and discuss the strategy now. What we're going to do is, in the delta profile, is whenever we see these clusters of high volumes and the delta profile showing, we generally mark these areas, okay, and we carry them forward for the future so that we can find a trade. This is the volume that is there. You can have max delta, min delta, COT high, whatever you wish, you can have them and you can carry them forward. Now, how do we use them? There are two ways where we can use these high delta values. So one of the most common ways that you keep hearing a lot is absorption. Now, what is exactly absorption? Is you go to a place, you have these guys who are trying to sell at the lows, they've failed, and it moves in the other direction. Okay, now this is it looks simple, but it is not. What happens sometimes is, I'll just delete it, like in this case, there will be a high sell value like this. There might be late sellers or the initiative sellers. They don't mind this price difference at the moment. So what will happen is, like in this case, they will go down and you will see a sort of absorption taking place because there is a, pullback. They go up and there is another level over here where the same sort of delta block would have been there, and you would have seen an imbalance zone or a delta block, any of these two, like this. It will come down to this place and take another go down, and it will go down further. So if you were thinking that this was an absorption and you get inside, you see something like this happening. So this is another common thing that happens. So we'll just see how do we go about it. So this is called the delta continuation trade. Okay, so what is happening is that the delta is actually whatever we thought was absorbed wasn't actually, and the guy stepped in again and took it further down, and it kept happening till such time there was an actual absorption, and you see something like this happening, and the lower delta block is not taken out. Then another delta block is formed above it, which makes you somewhat sure, and the probability increases that the reversal is set to take place. So this is the difference between the two, the absorption and the continuation trade. In the continuation trade, the previous level of delta block that you have marked will not be taken out. It will just go up, and the big bar that is formed because of such a high delta taking place previous to that or during this bar will not be taken out, and it will turn back from an important zone where the sellers have stepped in and moved down further. So we'll just see the examples of these and then compare it. This is a 21,800 CE chart, as I just said. So let's start with this. Okay, now as you see in this bar, okay, we'll start from these high volume bars. Over here we see the cluster that is forming is, I'll just get this rectangle so we can mark our important zones. So we can see firstly this zone is important because again these are two high volume bars, and if you've not seen my continuous POC video, this is a continuous POC, two continuous POCs with high volumes and a high delta. So this is a zone that I mark. Now what I'm looking at is, if I want a continuation trade on the buy side, I do not want this to be broken. So what I want, if I have to go long, is something like this. On the contrary, what happens in the next bar is, if this bar had to go up, what I would have liked is this bar, this high delta value over here, which is forming over here, could have been there, and a high delta block over here getting trapped, and the bar closing somewhere here, and then I would have preferred to take a long. So this delta block that I'm talking about would have indicated me that some sort of sellers are getting trapped because they thought that the market is going to go down, but it hasn't. On the contrary, what has happened is, if you look above as well, so there are some amount of buyers that have got trapped here, and these buyers, if they were so strong and not stops, they should have stepped in and not let the bar close below this. On the contrary, the bar closes immediately above this, and this zone is now carry forward because the buyers that were stepped in have been absorbed passively, and now fresh sellers have stepped in to take this bar lower. So I will carry this zone forward because this is the start of a move. Okay, this zone. Now what I will do is, whenever the market comes here next, and depending on how low it goes from here, I will take my points. For example, if it goes up to 120, let's say 30 points from here in this option. So whenever the market approaches this zone, and I see just what I spoke about right now, that is, if I see there is a bar that goes above but closes below this zone, and there is a delta block of positive delta on this side. That means I am seeing some positive market buyers getting trapped. I go in for a short with a stop of let's say, if you take somewhere here 153, 152, maybe a 5-6 point stop loss against a 8-9 point profit. So that is what I'm looking for. If I'm taking a 4 point stop, I would like to have at least 6 points in my pocket, and at least to start with. If I see something changing, I do not hesitate to take out my trade, even if I'm in a small profit or not. If I see the conditions are changing, I will take my trade off, because that is what we're using footprints for. I see a changing condition, we take it immediately off. So let's see what happens if the if it approached, ever did. If it approached, I don't think it has approached. Okay, this is the zone it has approached. You can see this, what happens the first time it approaches. This is what I was looking for somewhat. Okay, so the bar has tried to form over here. It is this is the first time. Now this is the best part. The first time will generally work like true magic, but the next time onwards, I did not see anything like that, so obviously we don't get into it. But this time, as soon as it worked, we enter and we see the bar that we're looking for, and we get a good risk to reward. You can see you get almost more than 10 points over here. So this is exactly what we're looking at, and you can find this in all areas of the chart. So this is a reversal setup that we traded. Now let's look at an instance where we could have looked for a continuation trade. For example, if we are going in this way and we see the bar come up and there's a range of sorts forming, so we want to short here, so at least we get some points till the other end of the range. So something like that. So let's look for places where we did find something of that sort. The easiest way to look at such zones is when you find high min delta or max delta and high volume bars. So this is another bar of, let me just mark this zone. Okay, so this is a delta block that we see. The POCs are quite close to each other, and this is a delta block we see. Now when the bar approaches this place, when the price approaches this place, as we said, what we want to see is this delta block forming. It has formed, but the bar should have closed above this, and that was a trigger to buy. And the target point, of course, would have been just closer to the top of the bar, where we saw the selling come from, but it doesn't happen. So this is a continuation trade and it goes down. Now we carry just a minute, I'll delete this. Now what we do is we carry this zone forward, because we know that some sellers are stepping in here, and we would like to take a short when the market returns to this place. Okay, a similar delta block has been formed somewhere here. If you see, this is the delta block that has been formed. We will carry this forward and see what happens if the market comes here. Now once the market approaches this zone, what we see is the bar closes on top. Now this is not a bar that that would help us initiate a short, because it is closed here and all these are market sorry for that. What we can see here is all these guys are aggressive market buyers over here. You can see this is the only bar with negative delta, but all are market buyers, this whole bar, and has a support zone, buy imbalance zone over here. So we cannot initiate a short over here, because there is a lot of bullish context in this bar. So that is the difference. We do not see a bar that has gone below this. And how do we need to initiate a short if we had to? This is the block that we are looking at, delta block on the top. Now if the bar would have, the next bar, even if the next bar starts trading below this or goes below this, it's a trigger for us to go short, and the stop loss again remains just on top of this zone. But it doesn't even breach this delta block on the upper side that we're talking about, and the other delta block is this. So when we are taking a short trade, we have to be wary of the fact that there is an imbalance zone, so it could very well come here and take a bounce on top. So this is where your risk reward comes into place. If you're not getting a 1:1.2, even if it is coming here, it's not a good trade, because you know there is a high chance that this delta block is going to act as a support and the market is going to move up in the other direction. Now let's move forward and see if we could find anything in this delta block when the market approaches the next time. It comes over here, there is a block, but again this is well below our zone, well above our zone rather, and we wouldn't have possibly got time to enter it. The next time it approaches this zone, Let's see, this is the time it doesn't close, but like I said, this is not a trigger for taking a trade. The next bar closes on top of this. Now this is the block. Okay, so the next bar, when it comes down and it fails, I would have taken a short trade over here, and the stop loss would have been below this, because I see that the delta blocks have started forming. Just a minute, I'll delete this. That the delta blocks have started forming above this zone that we have marked. So all these guys in this bar which we took a trade, there is a sellers that have got trapped, and have got there is a high probability that we're going to move in the other direction, although it does come to us very close to our stop loss. But again and again, this is actually more of a confirmation. You see, the bar isn't able to close, any of the bars isn't able to close below this zone. Okay, so that is why I would have initiated a long over here, and again the target being, as you can see, the zone just on top of that. So we don't touch it, we just fall short of it and move back down. But it would have certainly given us, let's see what the stop loss is. Of course, this is a very less small stop loss, 3 or 4 points against, I mean 5 to 6 points which it would given us. So this is the way you can find these zones and take the trades. Now see, as soon as this block is cleared, and you can adjust this block accordingly when this new zone forms, and this block gets cleared and it goes to the downside. The next time again when market approaches and you see a similar bar that we're looking at, that is this delta block, and all these market buyers getting trapped, it gives us a good risk to reward, and I mean a good trade on the opposite direction. And guess what, this is what we were looking at some just a little while back, somewhere where was that, where it just broke on the upside. This is the one where we were saying that there is a high chance that the market takes support over here. So something of similar sorts is happening here. So when we see when we take a short over here, we have to be wary of our stop loss. That is, the stop loss should be lesser than the target, which is going to be this block. Okay, and there is an imbalance zone also. So if you have a delta block of market buyers with an imbalance zone, this is a very good area which acts as a support. So if you want, you can take a trade on the imbalance strategy. This is not the delta block strategy, but you have a delta block along with an imbalance zone which acts as a good support, and you can take a trade in the other direction as well. So hopefully this video would be of some help to you guys. Until next time, thank you, bye bye.